Well, the optimism which had been building in the Australian stock market came to a screeching halt after Germany's finance minister cast doubt on the latest attempt to solve Europe's debt crisis. Investors around the world quickly reacted to Wolfgang Schäuble's comments, and when the dust had settled at the end of today's trading, the Australian market was down 2%. The latest sell-off comes as the minutes of this month's Reserve Bank board meeting reveal the bank is ready to cut interest rates if inflation remains under control. Andrew Robertson reports.
What a difference a day makes. Yesterday the stock market hit a 6-week high. Today it was heading south again rapidly after comments like this from Germany's finance minister at a forum in London.
We will need a sustainable a solution for Greece which could be understood as sustainable. It will take a long of time for Greece.
In other words, this Sunday's meeting of Eurozone leaders won't be the debt crisis panacea markets had been hoping for in recent days. That saw Wall Street shed 2%, its worst loss in 2 weeks. Australia followed suit, also losing 2%. Colonial First State Chief Economist Stephen Halmarick says he wasn't surprised at Wolfgang Schäuble's comments.
Expectations had really risen that the meeting on the weekend would come up with, the big bang plan that would, if you like, end the European sovereign debt crisis. And I think those expectations were really quite unrealistic, and he was just reminding everybody that there's still, I think, a long way to go in this process.
In a wide-ranging speech, the German finance minister also took aim at the US Federal Reserve and the Obama administration, saying it's no accident that US unemployment remains stubbornly high at around 10%.
Loosening monetary and fiscal policies in the short term while promising monetary and fiscal tightening in the medium term might have worked in the past. Today, however, as market reactions demonstrate, it lacks credibility with investors as well as with our citizens.
As stock markets in the Asian area took their turn to react to Wolfgang Schäuble's hosing down of expectations about the Eurozone, the Sydney-based version of the Take Back Wall Street protest was in full swing outside the Reserve Bank. It coincided with the bank releasing the minutes of this month's board meeting, in which it confirmed it was moving away from its bias towards raising interest rates again and is now squarely looking at cutting them. The minutes say that members believed that an improved inflation outlook, if confirmed by further data, would increase the scope for monetary policy to provide some support to demand, should that prove necessary. RBA code for lowering rates. Australian economic data since that meeting has been stronger than expected, and now there's clear signs the Chinese economy is not going to stall. Third quarter economic growth was down slightly to a still very strong 9.1%, but retail sales jumped by nearly 18%.
There's really no sign I can see of a significant slowdown in the Chinese economy. Monetary policy has been tightened for the last year or so in China, and that's having an impact. Growth is moderating. But I think the concerns of a rapid deceleration in China and a big slowdown in that economy are just not evident in the data.
Which, given the importance of China to Australia's economic future, means the chances of a Melbourne Cup Day interest rate reduction are now diminishing.